with its shares more than tripling in value since its lows in the March sell-off, and riding the post-COVID-19 trend of gaming and e-commerce. Sea Limited has become one of the darlings of Wall Street, with a total of 76 hedge funds invested in the company. So let's have a look at the business of Sea Limited. I'm your host Daniel, and you're watching the Due Diligence Report. Sea Limited is a Southeast Asian-centric technology company operating in the gaming, e-commerce, and payment space. It operates in the greater Southeast Asian economies of Indonesia, the Philippines, Taiwan, Vietnam, Thailand, Malaysia, and Singapore. Garena is Sea's digital entertainment business unit. It provides a digital entertainment platform for users to access mobile and PC online games and also runs esports operations. Garena adopts a freemium model that grants users free access to the platform's games. Its platform offers a range of PC and mobile games such as League of Legends, PlayerUnknown's Battlegrounds, and Call of Duty Mobile. The company generates revenue primarily by selling in-game items and season passes, transactions of which are facilitated by a variety of agents, which also include Sea's own payments platform, SeaMoney. Growth is primarily driven by the size of Garena's active user base and the level of user engagement. Due to the freemium business model, the higher the number of active users, the greater the likelihood of such users making in-game purchases. The user base is grown with new games, the expansion of existing games into new markets, and the improvement and launch of new content in existing games. Garena also organizes hundreds of esports events annually and operates the largest mobile game professional leagues in Southeast Asia, Taiwan, and Brazil. This serves as a means to generate strong user engagement for games, as well as promote user acquisition and retention. Spending on Garena's platforms is discretionary and users may be price sensitive, thereby undermining Sea's ability to monetize their business. To stimulate in-game spending, Sea needs to continue to ensure that their games are engaging, in-game items are appealing, prices are attractive, and marketing and promotional activities such as esports events are effective. Garena's primary cost components are channel costs and royalties for licensed games, both of which are generally paid as a percentage of gross billings. Now, to follow the state of Garena's business, we will look at three statistics. Firstly, user-based statistics. Specifically, we'll look at the year-over-year growth in active and paying users, as well as the proportion of active users that are paying users. For context, QAU stands for Quarterly Active Users, and QPU stands for Quarterly Paying Users. From the chart, we can see that QPU growth has accelerated in the past few quarters, while QAU growth has been on a slow decline. That being said, both QAU and QPU show rapid growth, with QAU still growing just under 50% year over year. As QPU has grown faster than QAU, the proportion of paying users has also increased. This bodes well for the monetization and profitability of Garena's business. On the monetization side, we can look at revenue per QPU, which has been on a gradual decline over the past 2 years. Significant increases in this metric may be undesirable as it indicates squeezing the user base, which may result in lower spending over time. Lastly, we look at the profitability statistics. Here I overlay Garena's operating margins with their QPU to show how profitability scales with their user base. Based on the declining QAU growth, revenue per QPU, and increasing operating margins, we can safely infer that Garena has transitioned out of the explosive startup growth phase and transitioned into a more mature, high secular growth business that generates good cash flow. The Shopee e-commerce platform is a mobile-centric, social-focused marketplace with integrated payment and logistics infrastructure and comprehensive seller services. Shopee was the largest e-commerce platform in Southeast Asia in 2019 by gross merchandise value, or GMV for short, and total orders, according to Frost & Sullivan. According to App Annie, Shopee was the most downloaded app in the shopping category in Southeast Asia and in Taiwan in 2019, across the Google Play and iOS app stores combined. Shopee earns its revenues primarily by charging sellers paid advertising services, transaction-based fees, and value-added services. They also conduct direct buying and selling of goods on the marketplace on their own accounts. This is a relatively small-scale operation at about 1% of GMV. To bolster growth, Shopee introduces many social and gamification elements which they believe enables them to increase organic user acquisition, user retention, and user time spent on the platform. Ultimately, they must increase the number of sellers and buyers on the platform in order to generate a larger number and value of transactions over time, which will drive advertising and commission revenue. As the monetization model is relatively new to Sea, the company is expected to make significant losses from the segment for the foreseeable future. Further monetization efforts could increase the cost of using the Shopee platform for users, which could negatively affect the number of users and the level of user engagement on the platform. Furthermore, Shopee's reselling activities are an inefficient use of capital. Shopee has been reselling goods at losses greater than what they spend on sales and marketing per unit GMV. Assuming that the loss from reselling is their marketing expense, since customers purchase these goods because they are below market price, this means that Shopee could have achieved far higher GMV had it just spent that loss on sales and marketing. The main costs associated with Shopee are bank transaction fees and service fees paid to third-party logistics service providers. For Shopee's key metrics, we will look at two charts. The first one shows growth and monetization statistics. We have the revenue to GMV ratio, which shows the extent of monetization of sellers. Again, significant increases in this ratio in a short period of time may work against Shopee in the long run. And we also have the year-over-year growth in trailing 12-month GMV. This shows us the growth in usage of the platform. Secondly, we have the standard profitability statistics, where I overlay Shopee's operating margins against its trailing 12-month GMV to show how profitability scales with the size of its operations. Based on the uptrend in the revenue to GMV ratio, a decline in GMV growth, and decelerating improvements in operating margins, Shopee is in a peculiar position where monetization is improving, while improvements in growth and profitability are decelerating. That being said, revenue is still growing at a rapid clip, clocking in 130% growth in fiscal year 2019. Therefore, we could argue that Shopee is in the midst of transitioning out of the explosive startup growth phase and is transitioning into a more mature, high secular growth business. SeaMoney is the overall brand for the digital financial services business. SeaMoney currently offers e-wallet services, payment processing, credit-related digital financial offerings, and other financial products. These services and products are offered in various markets in Southeast Asia under AirPay, ShopeePay, ShopeePay Later, which is a consumer credit program, and other digital financial services brands. SeaMoney generates revenue primarily by charging commissions to third-party merchants with respect to e-wallet services and earning interest from borrowers with respect to ShopeePay Later. For SeaMoney, the more users and merchants use SeaMoney's payments options, the greater the potential transaction volumes that drive commission revenues. Again, as the monetization model is relatively new to Sea, the company is expected to make significant losses from this segment for the foreseeable future. Further monetization efforts could increase the cost of using SeaMoney's platform for users, thereby increasing the likelihood of losing users to other competitors in this hyper-competitive payment space. SeaMoney is also competing in an extremely competitive space, while its operating margins are nosediving into the negative. With its core competency in gaming and a dominant position in e-commerce in Southeast Asia, it is hard to justify adding to ballooning losses for a sector that is hard to maintain a competitive advantage in. The primary costs associated with SeaMoney are bank transaction fees and commissions paid to counter operators. Because SeaMoney is so tightly intertwined with Garena and Shopee, its key metrics are largely based on how well the other two business units are faring. As long as they are growing, SeaMoney will be able to piggyback on the trend. For example, for fiscal year 2020 Q1, more than 40% of Shopee's gross orders in Indonesia, SeaMoney's largest market, were paid using the company's mobile wallet service. As Sea is prioritizing growth over profits for SeaMoney, it is not meaningful to look at its profitability metrics for the time being. Revenue has been growing at a rapid clip for all business units, with SeaMoney beginning to reap from some monetization efforts. It appears to be that Shopee has completed the rapid nascent growth stage and is transitioning into a steady high growth phase. On the profit side, we can see that Garena's operating profit has been buffering losses in other business units for many quarters, maintaining the growth runway for Shopee and SeaMoney. Operating expenses has been cut over the past few quarters, most notably in sales and marketing expenses. Research and development expenses, largely born from the hiring of more game developers and programmers, continue to hold steady as the company continues to consistently reinvest into its business. For both Garena and Shopee, spending on sales and marketing has been on a relative decline. This has accompanied the decelerating growth for Garena's QAUs and Shopee's GMV. You could interpret this as a bad sign that Sea is making unwise financial decisions that has resulted in a slowdown of their growth. However, you could see this in a positive light, that Garena and Shopee, as mentioned earlier, are transitioning into a more mature, secular growth phase with improving profitability. Firstly, as is the recurring theme for many businesses now, governmental policies and lockdowns as a result of COVID-19 have caused some sellers to reduce or suspend operations due to operational constraints or global supply chain disruptions. Sea has provided waivers or reductions of certain transaction-related charges, which may have a negative impact on their financial results. In light of the second wave of COVID-19 infections, another series of lockdowns may mean an extension of such discounts, which will cause ballooning losses for Shopee and SeaMoney. Secondly, Garena has a significant revenue concentration problem with its top 5 games, including Free Fire, contributing to 94.5% of its digital entertainment revenue. As Garena is the only profitable business unit, its profits are important for buffering losses, giving Shopee and SeaMoney a longer time period to scale up. Any deterioration in Garena's relationships with partners may lead to a loss of licenses, resulting in significant declines in revenues and profits for Garena, thereby causing losses to spiral out of control. This may result in further capital raises, which may be equity dilutive. On a positive note, it is known that Free Fire contributed to 51.9% of Garena's total revenue in 2019 Q1. Not much additional details are known, but it is an encouraging sign that Garena's in-house developed games can provide the next leg of growth for it, especially when gross margins are higher for such games when royalties do not need to be paid. Lastly, Sea has a geopolitical wing risk. In recent months, geopolitical tensions between the US and China has been on an uptrend, with the US Senate approving a bill that could lead to Chinese companies being barred from listing on US stock exchanges. This move to delist Chinese ADRs is an attempt to undermine Chinese dominance and reduce China's access to USD funding. While Sea Limited is not a Chinese company, nor does it operate in both the US or China, 23.68% of the company is owned by Tencent Holdings, a Chinese technology company that is essentially a national champion in China. Sea is a possible channel of USD funding for China through Tencent, which puts it at risk of being in the crosshairs of Congress in the event of further escalation in US-China tensions. To add on to this, Sea also conducts a significant amount of business in Taiwan, whose relationship with China has deteriorated over the past few months for a number of reasons. The Taiwan government has historically imposed prohibitions and restrictions on investments, directly and indirectly, by PRC investors. Currently, Sea does not believe, based on advice from their Taiwan Council, LCS partners, that they are a PRC investor under existing Taiwan law and court judgments. However, a flare-up in tensions between Taiwan and China may also place Sea in the crossfire. Moving on to valuations, I consider Sea's current valuation to be overextended, though with good reason. The company has been able to improve profitability in terms of return on invested capital from negative 48% in fiscal year 2018 to negative 15.3% in March 2020. This is due in part to the successful release of Call of Duty Mobile and Free Fire for Garena, the tailwind growth narrative around e-commerce and gaming as a result of the COVID-19 outbreak, as well as easy monetary policy made available by the Federal Reserve. That being said, Sea's current Q ratio is far above the one-year moving average of its Q ratio. While there is good reason for the uptrend in its Q ratio, I believe investors should be wary of a sharp correction downwards to possibly retest the historical Q ratio resistance of 6. Assuming excess cash and ROIC does not change materially in the next quarter, the stock may crash down to $55 a share in the event of a violent risk-off move. On the chart, I've indicated the implied share prices at certain Q ratio targets. We can see that on a daily chart, there is RSI divergence, which may be an indication of a top. Finally, there are multiple tailwinds that the company is riding. All 3 business units are connected together, most notably in the payment space. Each individual business unit thrives on the network effect, which means that the system grows stronger as the user base grows. Sea has the potential to harvest a lot of big data for future profits, most notably in the e-commerce space. Each business unit is also positioned to profit from strong macro trends. Garena rides on the gaming and esports trend, Shopee rides on the e-commerce and big data trend, and SeaMoney rides on the payments and big data trend. Furthermore, the business units are all mobile-centric and primarily operate in Southeast Asia, which has tremendous long-term growth potential due to its high mobile phone penetration rate, as well as favorable demographic trends. Overall, I expect Sea to grow rapidly over the next decade as it rides the trends of Southeast Asia. However, on a short-term basis, I believe Sea to be overextended in terms of technicals as well as valuations, and is due for a pullback. As long as the key metrics that we cover continue to show a sustained growth story, I believe Sea is a buy on dips. I believe the best course of action for Sea going forward is to focus on streamlining Shopee's operations and doubling down on Garena's business as far as self-developed games are concerned.